Welcome to Bullion Signal Podcast. We're the channel that helps you make sense of the complex world of macroeconomics and precious metals so you can protect and grow your wealth. Today, we are diving headfirst into the wild, unpredictable world of the silver market. It's a fascinating story of spectacular highs, crushing lows, and some really critical lessons from history that might just shape your financial thinking for the years to come. So, I want you to just imagine this for a second. Picture the date, December 12th, 2025. After a rally that has just been absolutely breathtaking, silver doesn't just break its old records, it completely shatters them, hitting an incredible $64.65 an ounce. The energy in the market is electric. For anyone who's been holding on, it feels like total validation. But that feeling doesn't last long. In fact, within just a few hours, the entire market reverses, and it does so violently. All that euphoria just vanishes, and it's replaced by a cold, hard panic. Silver closes the day not at a new high, but down 3.5%. It's a brutal, whiplash-inducing reminder of just how ferocious silver can be. So, what on earth is going on here? What is it that drives this kind of insane volatility? Is it a massive red flag, a warning sign that a crash is coming? Or is it maybe something else? To really get to the bottom of that, we've got to understand the forces at play, not just today, but also deep in the past. So here's our game plan for today. First, we're going to look at the current spike in volatility. Then we're going to take a trip back in time to a day known as Silver Thursday. It's a ghost that still haunts the market. After that, we'll compare that period to today's environment, because they are very different. Then we'll explore a fascinating idea, how this volatility can actually be an opportunity. And finally, we'll look at what all this might mean for the path forward. Okay, let's start with what's happening right now. In the environment of late 2025, you have to understand that volatility isn't just a feature of the silver market, it is the market. It's this powerful beast that can make you a fortune, or it can absolutely devour you if you're unprepared. Now, if we look at the numbers for the fourth quarter, it's pretty stark. Silver's annualized volatility has surged, hitting somewhere between 40 and 50%. Now, just for comparison, look at its much calmer cousin, gold. Gold is sitting down there at a relatively quiet 25%. What that tells you is that silver is reacting nearly twice as dramatically to any piece of news or shift in market sentiment. But here's where it gets really interesting. As crazy as a 50% volatility swing feels, it's like a hurricane hitting your portfolio. It's actually nothing compared to the absolute mania of the 1970s. Back then, volatility shot past 60%. That was a market that was completely off its leash, and it holds a really important lesson for all of us today. And to really get a grip on the risks and the rewards in silver, we have to go back and face that ghost from the past. I'm telling you, this isn't just some dusty old history lesson. It's a cautionary tale, and its echoes are still felt in the market every single day.
This timeline really shows you the anatomy of that bubble perfectly. It all started with a very real problem. Inflation was out of control. But that real problem got hijacked by pure, unadulterated speculation as the Hunt brothers tried to corner the entire global market. This mania sent the price soaring over 700% before the whole thing came crashing down.
And the day the party ended, it got its own special name, Silver Thursday. That was the day the illusion was completely shattered. When the Hunt brothers couldn't come up with the money to cover their bets, the panic that they helped create turned on them, and the entire market just imploded in this legendary way of selling. The price of that collapse was just staggering. An 80% loss from the peak to the bottom. I want you to really think about that. That means turning a $100,000 investment into just $20,000. It wasn't just a market correction. It was a total annihilation of capital that left a scar on an entire generation of investors. And the damage went so much further than just numbers on a trading screen. The fallout was real, it was painful, and it was deeply human. The ripple effects from that speculative bubble caused bankruptcies, it destroyed businesses, it ruined families. It stands as this permanent monument to the dangers of a market that's driven by greed alone, completely disconnected from any real value. So, with the dark shadow of 1980 hanging over us, you have to ask the question, are we just doomed to repeat history? Is what we're seeing today just the beginning of the same kind of collapse? Well, when you actually dig into the fundamentals, the evidence suggests that the answer is no. And this is really the key takeaway here. While the volatility, the wild price swings might feel familiar, the engine that's actually driving the market today is fundamentally different. The 1980 rally was built on speculative air. It was a house of cards. Today's market, on the other hand, is built on a solid foundation of real-world physical demand. And that creates a structural support that just wasn't there back then. It completely changes the risk profile. Let's get really specific about that foundation. We're in the 5th year in a row where the world is using more silver than is being mined. That's a supply deficit. Demand from solar panels and electric vehicles isn't just growing, it's exploding. And a lot of this industrial demand is inelastic, which means factories have to buy silver no matter what the price is. You add to that a much more regulated and transparent trading environment, and you've got a market that is just far more resilient than that house of cards from 1980. Okay, so if today's market is built on a stronger foundation, what does that mean for how you and I should think about these gut-wrenching price swings? It means we can actually reframe the whole story. Instead of seeing volatility as just a threat, a prepared investor can actually see it as an advantage. So this lays out a potential strategy for how to navigate this storm. First, you might see the market consolidate, building a new floor where the old ceiling used to be. Then, during those inevitable, sharp sell-offs, the ones that cause panic, those who understand the strong fundamentals can accumulate. They can buy when everyone else is fear selling. And it's from that new, stronger base that the market can then launch its next major advance. All right, so this all leads us to the big question, right? Why would anyone willingly sign up for this kind of roller coaster ride? The answer, as it often is, lies in the potential reward for those who can stomach the journey and navigate it successfully. And you simply cannot ignore the bigger picture here. The U.S. national debt has now swelled to a jaw-dropping $38 trillion. In an era where governments are printing money and debt is spiraling, the argument for hard assets like silver, well, it becomes incredibly powerful. And this chart just illustrates that risk-reward trade-off perfectly. You could put your money in so-called safer assets like bonds and maybe get a 4% return, or you could face the volatility in silver for a potential upside that's in a completely different league. A 75% gain, that isn't just about keeping up with inflation. That's about genuine, life-changing wealth creation. And look, this isn't just some fringe idea from a few silver bugs anymore. The mainstream is finally starting to get it. The consensus among market analysts is starting to cluster around a much higher price range for mid-2026. It suggests there's a broad recognition that the structural shift in the silver market is real, and it's happening now. So here's the bottom line. There is simply no road to the kind of massive returns that silver offers that doesn't go through the toll booth of volatility. It is the price of admission. It's the very thing that shakes out the nervous investors and rewards those with conviction. You can't avoid it, you can only prepare for it. And that really leaves us with the final question. Unlike that fragile, speculation-fueled market of 1980, today's silver market is held up by powerful, real-world fundamental drivers. Understanding the history and understanding these fundamentals doesn't make the risk go away, but it does give you a map. And for those who can read that map, the journey through this storm could prove to be very, very rewarding indeed. Thanks for joining us on Bullion Signal Podcast. If you found this analysis helpful, please like, subscribe, and share it with someone who needs to hear it. We'll see you next time. Before you go, please remember, the content in this podcast is for informational and educational purposes only. It is not financial or investment advice. You should always conduct your own research and take full responsibility for your own decisions.